Today we are looking at what's gone on with the Walt Disney Company, ticker symbol DIS. What has happened with Disney? Why is the stock price at $150 a share, and should you buy this right now? It was previously at $200 at its all-time high, and even early as November it was $180. So what is Disney? Well, Disney is an entertainment and media conglomerate headquartered at Walt Disney Studios in California. It has many different avenues, but its main part is the film studio, Walt Disney Studios, which includes Walt Disney Pictures, Pixar, Marvel, Lucasfilms, 20th Century Studios. They just had a film recently that was out #1 in the box office, Encanto, and also, Disney has a lot of other things, not even including the theme park resorts. They also own the ABC broadcasting network, which contains Disney Channel, ESPN, FX, National Geographic. Also, they have their premium streaming service, Disney Plus, which is one of the largest streaming services in the world. We're going to be touching upon that in just a moment. But first, can you give a like on the video? Let's see if we can hit 50 in this time, and let's just get straight onto it. So, what has happened with Disney? They missed earnings. You can see it was a bit of a decreased, was down 28% on the earnings per share, and then revenue missed a little bit as well. One of the reasons that investors and the market reacted negatively to this was the increase of Disney Plus subscribers. So you can see here, this is only from 2020. Started off at 26 million, is up to 120 million, or 118 to be more exact, and only had a small increase from Q3 of 2021 of 116. Now, if we compare this to their counterparts in Netflix, this is a bit of a longer chart. You can see here back to 2013, but they haven't released their Q4, but they were at 213 million for their Q3, and that was up from 209 in Q2. So Netflix has been increasing slowly. Disney has done a pretty good job of trying to catch it up. I mean, over half of the entire Netflix users right now, but analysts were analysts and the market and everyone was a little bit negative on the slow Q4 earning subscriber growth. But that's not the whole reason we're here. We're going to look at the fundamentals. So Walt Disney has a market cap of $270 billion in the communication services sector, share price of 146, 52-week low of 142, and a 52-week high of 203. Does not pay a dividend. They used to pay a dividend, but they cut that with the pandemic. So is the PE ratio less than the market? No, it is not. 135 to 28. Now, obviously, we'll get into the profit and why that is the case, but next is the revenue increasing. Yes, 59 billion to 67 billion. So that is a pass. Next is the profit increasing. No, it is not. 12.5 to just under 2. So if we just go to the financials here, you can see that the 2 pandemic years have been bad for Disney. 2 billion this recent year and minus 2.8 billion in 2020. In 2019 and in 2018, it was around about 11 and 12 billion. So decreased massively from 12 billion, but has turned it around from 2020 where they were negative. So that is still a fail, and a big fail at that, but they are trending in the right direction. Another thing that we want to see trending in the right direction is shares outstanding. And no, they have issued more shares, 1.5 billion to 1.8. We're on the last step, increasing free cash flow. I'm going to say this is a no. Yes, it is. Just under 10 billion and is now down to 2. And this is a similar story as well. But in 2019, the free cash flow was quite low down. We'd have to look in that. You can see they had a massive repayment of debt. So that was probably the reason why that was so far. But you can see it was 9 billion in 2018, 1.7, 3.5, and 1.9. So free cash flow has decreased. Not been looking good for Disney over the past couple of years with the free cash flow. So what does that give us? Well, that gives us only one pass and a free cash flow ratio of 137, which is pretty in line with the PE ratio, which is normally a good sign, but not when it's this high. So fundamentals aren't looking great, but as we all know, Disney has been hit very, very hard in these pandemic years. So what we're going to do now is look at the discounted free cash flow model. We've calculated the future free cash flows based on these current estimates and current values, and we'll discount it to today's value. So you can see here This is still increasing, but a long way from 2018. So let's have a look at what that gives us right now. Well, this would calculate a stock price at $74 a share, which is down from $150 by quite a bit. So discounted free cash flow with the current COVID years included does not like this stock. But what we're going to have to do is take a look at this here and try and basically almost ignore these big years, which you don't want to do, but we need to kind of see. So analysts are expecting around about 9 and 10% growth. So if we increase that, the revenue growth rate to about 9%, and then we look at the net income margin of what we're usually expecting based on the revenue, which was previously around about an average of 18%. Compared to 8, you can see this brings up the free cash flow massively again. And what would that say if free cash flow was able to get to previous values, which was around about that 9 billion mark? That would give a calculated stock price of 157. And if you are a little bit more bullish on the stock and think it is going to be ahead of where it is in 2018, even then 183, which would be a 22% discount. So discounted free cash flow based on the current valuations and current future free cash flow estimates, you would have to be pretty bullish to say it is a buy, which that is what people are betting on with Disney. Next, we want to look at the Buffett Graham intrinsic value. We have a very low earnings per share, and that is why this has been hammered, to be honest. You can see that that has a fair value of around $100 a share and a Graham price of 70. So Disney need to get that earnings per share up. If we look here, you can see that earnings per share was previously $6 a share in 2019. So if we try and let's have a look at the analysts' estimates again. Their growth rate over the past 5 years was around about, very low actually, 1.2%. 1.5%. And if we try and basically plug these numbers in, so earnings per share of around about 6, and we had about 1%, 2%, that would still be undervalued, which is interesting. Now, if they get an earnings per share and have that expected growth rate, if we say the earnings per share can get back to their previous amount at 6, and the growth rate is around about what analysts are saying, which is about 9%, 10%, then would that be a buy? Pretty close again, 171 fair value, Graham price of 130. So discounted free cash flow and Buffett Graham intrinsic value are pretty in line based on sort of current years. It's not looking like a buy because they've been hit hard with the pandemic. But if Disney get back to what they are doing, then the stock is about fairly valued with a potential increase of around about 10 to 20%, which that is on the more bullish estimates. So what we want to do quickly, just in the last part of the video, is look at some technicals. And what we'll do here is we will add some moving averages in here. Normally, I would add a 50-day, 100-day, and 200-day. But just for the purpose of this video, because Disney has been absolutely hammered in the short term, I just want to add a 100-day and 200-day for now, just to kind of see what you could have seen and where it is. So let's just add the 100-day in yellow and a 200-day in red. And as you can see here, well, Disney is trading like that. I'll just add the other one in. Why not? It'll only take a second. But what you can see here is that Disney is trading way below these major moving averages. A lot of death crosses here that would have signified the price movement to the downside. And yeah, you can see here the 50-day crossed below there. And then here, when the 200-day and 50-day and prices crossed, that would have been your sell signal. So right now it is way, way below. One thing that I do want to look at is you can see here, this is before the pandemic, and it is about the same price before then. So there has been a bit of resistance at this 145, 140 mark. So if it gets back down to then, that could be a good buying opportunity because that had resistance pre-pandemic. Obviously, the pandemic broke it all the way through there, but that has been a previous resistance point. Next, what we're going to do is look at the Rsi and Macd. Let me just get rid of these indicators. So let's go the RSI and then change it to a yearly chart once again, and this is the daily RSI, and you can see that a couple of days ago that was in the way oversold regions, which would usually be a buy, and as you can see there, then that would have been a good buy signal. It hasn't been on the daily this low since that dip in May, and then again the dip in January. Now if we just go to the weekly chart, which is a good one I like to look at, this is in oversold regions that has not been seen since the pandemic, where it was even past that line. But basically Disney is never usually in these oversold regions. You would have to go all the way back to 2016, 2015, where it was in these regions, and then it chopped back. So RSI is probably saying it is a buy just because Disney does not usually get into this. And then finally, let's have a look at the MACD on the daily level. And what is this saying? Well, that is some very negative price movement, but you can see that basically the MACD and signal line are crossed. They are also below zero, which is very bearish. You don't want to see that, but it looks like they are actually switching and it would be a buy signal there. So RSI and MACD is actually saying quite good things, but the moving averages, Disney is way below it. But this has been a previous point of support. And then touching upon what the discounted free cash flow and buffer grade intrinsic value is saying is, yes, on the bullish estimates, Disney has a little bit to go up, but if we are a little bit more conservative, you can see that Disney is pretty much undervalued at that point. Overvalued at that point. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it. Give your comments on your thoughts on Disney, and I'll catch you guys next time.